Hello and welcome to the channel. Today we are going to be breaking down USDJPY and I'll share with you my trade plans for this pair going forward. So let's get into it. Really quick guys, before we get into the analysis, I've got a free training that you can watch right now. It's about 40 minutes long and it's going to open your eyes to a new perspective of the market. Check that out using the first link in the description. So looking at USDJPY from a daily time frame perspective, we can see that we had this large imbalance with a demand zone just down here. Now price came into this area, retested, and then has pushed up and actually formed a break of structure at this level here. So what we can actually see now is that UJ is essentially bullish. We came down to this demand, retested, and then pushed to the upside once again. Now we haven't made a higher high yet, so this isn't a new high in the confirmed trend move, but I do think that we are likely to push up towards this high, following this lower time frame bullish trend to take out this high and trade into the 138 key level. So as you can see, I just marked on 138. That's a key psychological level that price is likely to be drawn towards. And there's two other levels up here that I'm very much interested in as well, those being 139 and also 141. So I'm going to mark those on and you can see why they are high interest areas to me. We have an imbalanced supply up here into 141, and if we go down to the 4-hour time frame and take a look at that 139, you can see we have a similar thing once again. So I do believe that price will continue its bullish momentum and trade us up, take out the liquidity above this high, and pull towards that 138 level before potentially going on to 139 and 141. So looking at the current trend, everything looks pretty solid for this continuation move up. If we are looking at this substructure move from this point up to here, we have a continuous formation of higher highs and higher lows, drawing price towards where we want it to go. Now I'm going to shift over to the daily real quick and we'll actually look for the confluences that gave me the idea to buy in the first place, because I found this position before we pulled down to this area and we have now had a solid reaction. So I've marked on here the last candle before the impulse. That is going to be the daily demand zone that we've reacted into. If we grab the Fibonacci retracement tool, we can mark this low to this high here, and we can see that the Fib extreme, the 0.88 level, did get retested. And another great thing is going to be the 133.500 key level. This major psychological level at the 500 has been precisely retested before this push away occurred in the market. So everything is looking good for a bullish move so far, in my opinion. And if we go down now to the hourly time frame, we can start to break down this current price action, because this is where those buy entries are going to come in. So looking at the structure then, we had the key level retest, demand zone retest, Fib extreme retest, and then we've pushed up and we actually formed a break of structure. That break of structure occurred at this high here, where we had these lower low, lower high, lower low, lower high, lower low. Now we've broken up to a higher high. So this has given me good confluence to actually look for those longs, because we've now got the lower time frame in agreement with the higher time frame. Now we've also got these two near equal low liquidity points just here as well, which sit above the imbalance that we've got in the market. And the imbalance is simply a large open move in the market that very often times are actually pulled back through and filled in before the market continues off in its direction. So we've got a break of structure, we've got this liquidity and imbalance below, we've got reasoning to expect the market's going to go up, but judging the price action we have here, we could expect it to pull down before it does actually continue pushing to the upside. So in terms of structure, what we can do, just to get a brief idea, is head on over to the 4-hour time frame, and what we can see here on the 4-hour is this 4-hour demand zone just here. So on the surface, this seems like a really solid place to buy, and you may consider putting a buy limit here. However, I do believe there is a possibility the market is going to pull lower than this zone. So what I would like to do with this 4-hour zone is actually tackle this from a confirmation perspective. Meaning if price does pull into this zone, it will be an area I'll like to focus on, but I will have to see a structural confirmation change before I start executing any trades. So I would need to see here on the hourly 30-minute for price to pull down into this zone and then give me this lower low, lower high, lower low, breaking into higher high formation in order to be confident enough to buy there. So I won't be using buy limits here, and the simple reason for that is if we go to the hourly, this to me looks like it could potentially be an inducement zone. So if we can get confirmations, I'll opt to go for that so we don't miss the larger move. But we've also got this imbalanced demand zone just here at the very extreme of the move. So here we can see last candle before the impulse, pushed away, pulled back, failed to retest, and then pushed away and made these new highs. So looking at this open space here, it's very possible that this could be filled. So what I would like to do in terms of buy limits is actually look to place those buy limits down here at the extreme. and the trade would look something like this, with stops below and then the targets into those open skies leading towards 138. This leaves us with two possible positions to get into the trade. We have the confirmation style entry idea from 134.2, 134, that kind of area, and then stretching down towards around 133.750, this nice key level area with the imbalanced demand. This is where we could go with a buy limit if you wanted to do that, and if your strategy suggested that you could do that. And then, of course, where will we target? Well, we will target the 138 key level, pulling us all the way up into this high. And this could be around a 13.5R trade, meaning if we risk $100, we could make 1,350 if this trade wins from the extreme zone and the buy limit at that level. And that is pretty much my plan for USDJPY. And remember, the best way to succeed for yourself is to learn from others, not to copy others. So make sure you do your own analysis on this and make sure you manage your risk. I don't want anyone blowing accounts if the trade doesn't work out. So as I mentioned before, go and check out the free training. That's going to open your eyes to a new way to view the markets and set you on the path to success. I hope you've enjoyed this video. Thank you for watching, and I'll see you in the next one.